Hello everyone, good morning. Welcome to our very first podcast series named as Trends with Benefits, wherein we reach out to professors and SMEs like yourself and get some candid opinions on the latest issues or trends that we would be discussing. This is where I actually wanted to head at, like how, as a beginner, can someone get a structure as to what information is relevant or not? What I'm trying to tell is there any good websites they can start referring to? Is there any courses available online or at Stevens, or any softwares they can get, hooked up to where they'll be getting some good information, which is very holistic in nature, and, they'll be able to address all these questions, particularly the silly questions as well.
Well, what I like to say to my students is that the market is the dependent variable, and the economy and the political economy of the world is the independent variable. So if you want to project what's going to happen into the prices of assets in the market, you need to know what's happening in the world at large. And that means not just the economy, but the Federal Reserve, the politics, even the weather. Can all be important to determining the values of asset prices in the market. And I think that means that you just have to open up and absorb information from as many good, reliable sources as you can. In my introductory quantitative finance course, I assign the students to read the Wall Street Journal and the Financial Times every day. And they get a quiz every day. And that, I think, begins to develop the habit of acquiring information about the world at large that they need if they're going to be successful in projecting changes in the financial market.
That's a really good starting point, coming up and updating yourself with the news. Any other information or sources you guys want to highlight?
I think what Professor Calhoun is mentioning is very appropriate. I mean, there's kind of different types of investments, right? There is a long-term investment, kind of like Warren Buffett, that he has a very big view, very long view, and he can afford, for example, if he buys the stock today, he can afford for the stock to go down for the next week, even half of that. So if Netflix goes to 200 to 100, he can eat that and wait that in the third week or the third month, the stock is going to go back to 300, and he made an actual profit, right? And this is very much in line with the stop-loss rule that we talk about, right? His stop-loss rule it's much lower than 100, right? So he has the tolerance of having like a very far away stop-loss rule. Now, I mean, I'd say in the context, I think news today, it's the most important source of information. Now, interpreting how news is going to affect the stocks, that's pretty tricky. Because you can, for example, read the Google posted a profit of 2% today, and the stock goes down. And you go like, why is this happening? Why is Google stock going down? Well, there was an analyst, a consensus maybe 15 days ago that said that stock, Google stock should post around 3% profit. So when the actual 2%, that's lower than, so you really have to be aware of everything that happens. And this is even more prevalent in the context of a day trader, right? Yeah. A day trader, and perhaps in the day trader is much more, I mean, it's just, again, Dragoș mentioned to you a little bit earlier that there are two fundamental types of day traders, right? Of high frequency traders. A trend chaser and a mean reverter. So basically what that means is one guy bets that the stock is going to, or the asset that is betting on, or is buying, or is selling, is going one way or the other, either, up or down. And then he's just going to make money from this belief. Another way to think about it is, well, there is no news, and this thing just fluctuates. And if it fluctuates, if it goes too much up, then I'm going to sell it. And then when it goes back down, I'm going to buy it. So I'm going to make money from this particular fluctuation, right? Yeah. Now, obviously, if the asset goes like this, and then you sell it here, and it continues to go up, then you're going to lose money. So basically deciding on which one of this is, that's, very important. And I know that because I run a conference in high frequency, right? And there's like one particular company that comes in who all they do is just sell large orders. So Goldman Sachs would come to them and say, hey, I have 20,000 shares of IBM. I want you to liquidate them for me. And the price right now is 100. I know if I sell them myself, I'm going to incur a loss because once I start selling, the price is going to go down. So I'd be happy if you give me $99 per share on the average. So then what this company does, takes the big chunk and selling during the day, and then at some point, which is agreed upon through a contract, repays back the money to the big company, right? Whatever they make on top of that, that's their profit. So I know that their trading strategy, for instance, stops during major announcements. If there is some sort of major news that happens during the day, they just stop trading because that's very unpredictable. They don't know where the stock is going to go afterwards, right? So the point that I'm trying to make is for high-frequency traders. So, daily traders actually, they take advantage of this news. So they anticipate and because they have a long-term horizon. But for high-frequency traders, this is not such a good idea, because you make money from various different strategies. You want to make money stable. You don't want to be exposed to large volatilities and large risks.
Yes, so that's very helpful. So now that I've come up to level 1, which is like getting all the news possible, I want to get more further specific as to once I have the news, how do I know which product am I supposed to go for? I also understand there are like plethora of products available in the markets. You guys are talking about stocks. There's some debt products. There's portfolio. There's options. I mean, like where am I supposed to go with all the news? What's next?
Well, I suggest for beginners that you start with the stock market, the good old-fashioned stock market. That's where you can absorb news about a company. You can decide whether you think the company is going to do well, and you can invest in it. And it's a pretty simple calculation. Many of the other markets, the options market in particular, are much more tricky. They're much trickier to figure out what the position should be. And I don't think in general for beginners that's a good place to begin.
So in terms of like the information of products, like what courses does Stevens have or what softwares does Stevens have, which will really aid them to get better insights of the products, present in the stock market or just products for trading in general?
So I would recommend, I would definitely agree with Dr. Calhoun's assessment. Now, to go into more complicated, like options, you gave an example there, but of course there's many more instruments other than that. I would recommend at undergraduate level, we have a course called QF 430, which is in derivatives, right?
Yes. Yes, it is, yes.
So I think that's for the undergraduate students. For graduate students, actually, we have one of the courses that Professor Bozdog used to teach. He hasn't taught in a while now, which is 620, Pricing and Hedging, which exposes you to a lot of instruments and exposes you to this idea of hedging. That is, basically, you buy an instrument to hedge risk, to hedge the risk of your portfolio going down. How do you do that, right? And we have another course, which is beginning for financial analytics, which is called Risk Engineering, Introduction to Risk Engineering, FA 535, and that teaches you kind of the basics of what we've discussed in the beginning, the risk profile. How do you determine the risk of your portfolio? How do you know how risky your portfolio is? So absolutely, I would say these are beginning courses. Now, obviously, this is something that I like to repeat all the time, even though I'm not sure if it's true or not. Maybe George can correct me if I'm wrong. The financial services industry, which is the name that's given to the industry sector that represents finance, which is what our programs are preparing the students for, is the largest sector in the United States. Is that a true statement or not?
Yes, generally speaking, yes. It's larger than healthcare, which is the second largest.
So having said that, because it's the largest sector in the United States, obviously there are millions and millions of job opportunities in this particular sector, right? So we would like to have as diverse an offering as possible for our program, so that the students that we have go into all the aspects of the financial industry, financial services industry, right? So as much depth and as much breadth you can get through our courses, I believe it's going to be very beneficial for students to kind of get them a diverse horizon of the type of job they can qualify to.
So if I may add, in all these programs, typically you have a core, right? Core courses, right, and then you have electives. So at least at the minimum, right, the core course should present, the body of knowledge, let's say, that is necessary. Once you need necessary in finance, right, in mathematics, calculus, advanced calculus, right, and programming to some sort of technology, right, because you have to use platforms, right, for training. So it's a multidisciplinary field, right, and it's not possible just one course is going to cover everything. So for a strong foundation, right, it's ideal again to take multiple courses.
So on that note, Professor, she's from finance background, but students like me who are from BAE, who are from MIS, who are from CS, they are more into coding stuff. But if they want to go to finance industry, because we are right next to New York City, so what courses will you suggest students from finance background, not non-financial background, to take? Like, what is the one important subject that will cover all the basics for them? If they take that subject, they will have at least the basic understanding. For example, if you take a developer, he has to work in finance industry like JP Morgan. He should understand the basics, then only he can develop the product. So what one or two subjects, because we can't take multiple electives like the finance students, so we can take one or two subjects. So what are the two subjects or a single subject that you guys would suggest for people from non-finance background?
Well, I mean, so that's a good question. Yeah. But unfortunately, it does not have a simple answer. I can tell you that you can work with an IS degree without taking any of our courses. You can work in finance. Yeah. But you're going to work for JP Morgan, for example, in their IT division, doing just IT work. You're going to see, and this is something that we have a lot of students. This was how the financial engineering program was built in the first place. Yeah. These students, these people that go in the IT sector, they're paid, a certain salary, and then they look across the whole way into different offices, and those people in those offices, they make double what they make. And they're working in finance. So they're wondering, how can I not make that? Because I'm working with the same financial data. But how can I not make that? And the answer is, well, you don't have any financial knowledge. So you don't actually qualify for those jobs. So we have many, many students that are graduates today of the financial engineering program who went this trajectory. They worked in IT, they took the financial engineering, that's an entire program, okay? And then they moved across the alley to various different jobs in the, in the financial, there's a quant and so on. So to answer your question, it's really difficult. Even for us, for example, even within financial engineering and financial analytics, there is different areas. So we have a certificate in algorithmic trading. You have 4 courses there in that particular specialization. There is a specialization in risk management. You can end up as risk management in a bank, but that has 4 different courses, right? We have a specialization in finance and stochastics. Financial statistics, we call it, where you can end up as a data analyst, right? And again, there's 5 courses in that specialization. So this is not a simple question. It just really depends on what kind of role you want to work in the financial industry. Like I said, financial industry, probably we have our guys in the lab, right? Last year, we had, I think, 3 of them got into Virtu Finance. Virtu Finance is not really a finance. It's basically an aggregator. They create platform and a technology, and all of them, they were computer scientists. So no course in finance, somehow end up in finance, but not really working in roles that are related to. So it really depends. It's not really a simple question. I would say if you really want to migrate, I would say the starting point is our website, wfsc.stevens.edu, and basically looking on that page to courses. At the bottom of the page, we have something called certificates. Because the certificates is a less amount of courses, and they're kind of focused. So you can kind of get your masters in information systems, for which you need 36 credits, and maybe you can take 1 or 2 electives, 1 or 2 courses from there as electives for you. And because of the structure of tuition at Stevens, you can easily end up with 39 credits or even 42 credits in 4 semesters.
Yeah.
So that would allow you to do a certificate, and the certificate will help you get a position which is more closely aligned to the finance in the finance industry.
Okay, thanks for it.
So now that we are getting into more of getting the news and the products and the courses offered by Stevens. Now Stevens prides itself being, pioneer or being a forefront in technology aspects. So just want to know if I, as a student, want to be industry ready, what technology, especially in finance, am I supposed to be well versed with, and how does Stevens support me in that? If you could let me know.
Right, so in terms of the technology, right, so there are many components of this.
Right.
In the financial industry, right, so first of all, you need financial data, right, and financial platforms.
The database, that's right. Yeah.
So from this point of view, right, we have subscriptions to major data and analytics providers, such as Bloomberg, Capital IQ, Words, right, and Refinitiv. Right, so the students, right, will have access to all these sources of data, but also, as I mentioned, right, they have analytics tools. Right, Bloomberg is not just data, but they process the data and they give you tools, right, to further more, right, the analysis. And right, so in order to process the data, right, we need computational capabilities. Right, so we have a large number, right, of workstations, physical workstations, virtual machines, right, as well as computational clusters and then storage component. Right, so the technology, kind of the technology aspect, right, it's fully covered, right, at Stevens. So we need just the bright minds, right, and hardworking students to join us.
Yeah, I would also say we have these lab courses which we introduced maybe 10 years ago. It's been a while.
Yeah.
And these are kind of innovative. It's 1 credit, they're 1 credit courses, and majority of them. And we teach skills such as Python, R, databases, so kind of programming skills which are kind of important. These are most beneficial, I would say, for students that are coming with a finance background, a traditional business school background, because they really have not been exposed to programming, and a lot of them, are struggling. And I would really emphasize what Professor Bozdog just mentioned, and that is work ethic. These are, kind of alien subjects for the typical business school student, and they have to get dedicated, to them, to study them and so on.
Yes, so Hanlon Lab has been one of the great, you can say, innovation hub wherein all this database, amalgamation of all the technology and database have been put together so that everyone, not only the finance student or not only the IT students can just come and get information through almost everything, I guess, both finance and the technology aspect. Is that right?
That's correct, and I will point out to Professor Calhoun because he had the initial idea back in 2010 when we were, first of all, in 2010 we were sitting down. I remember sitting in this room with him and our professors from computer science and math and finance to discuss the creation of this program called quantitative finance, which was really, really innovative at the time. It was an undergraduate program. Normally, these programs that we're talking about are master's level. There's no undergraduate program. There was no undergraduate program at the time.
Right. Currently,
there are many imitators now at the undergraduate level, but this was, I believe, the first one in the United States. That was 2010. And then 2012, 2011, they started thinking about him and another professor from here, Calhoun. They started thinking about the creation of kind of a hub for all these data sets and technology. And that's a Hanlon laboratory. So I would like him to say a few words about this, because he's definitely the initiator of the whole thing.
Well, I think you've said it well. We are trying to be innovative, but to pay attention to the way the industry is actually structured today, and not we don't have a legacy view of the financial services industry. It's a very different business in finance today than it was even 20 years ago. Much more technologically driven, and I think we have to stay close to our customers, and we've done a pretty good job of that, but it's also something that we have to continually refresh, and I think we do a pretty good job of trying to do that as well.
Yeah, to add one comment to this, so I remember before the pandemic in 2019, I think it was, I went to give a talk at JP Morgan, and there were some employees there. Basically, I was talking about the programs, the financial engineering and financial analytics, right? And I remember that after I gave them about the spiel, about the program, what they do, what topics, one lady came to me and she said, hey, if I come to financial analytics or financial engineering, can I learn programming? I'm like, what do you mean programming? That's a very broad term. And she said, well, I've been working at JP Morgan for 2 years now. I graduated at Columbia Business School, and I graduated finance. So last September, the CEO said that everybody has to know programming. I only do Excel. And apparently that's not programming. So I need to learn programming. So I don't know what this programming is. So I want to come to a program and do some courses that are going to teach me programming. So this, my anecdote here is just to point out something that Dr. Calhoun mentioned, just how much the industry has changed in the last, 10 years or so.
That's nice. Thanks for letting us all know about the resources and everything, and that are all the questions that we have today on our end. And thank you so much for being a sport and being so honest and candid about answering the questions. And on that note, I'd like to end our first ever podcast. So congratulations on that.